Hey everyone, and welcome to the PivotBoss Closing Report for January 11th, 2016. I am Frank Ochoa, aka Pivot Boss, with your analysis for the upcoming trading session, January 12th, 2016. Taking a look here at the daily time frame of the ES. Obviously, we know that the 1981 half composite low volume node there gave way, and once it gave way, we had two downside targets. We had 1935s and 1879s as our next key downside targets. 1935s were basically reached in the first session, and now two sessions in, we basically all the way down close enough to get to that 1879. Currently, bears are defending pullbacks to 1935, and it appears that any pullback would likely be a selling opportunity for a continuation into 1879 with a shot to see lower price targets ahead. Now, one thing to keep in mind, if price is able to go bid through the 1935s and you see a big close above that zone, that could be an early indication that we're going to bounce right back toward 1981's half for a key retest. Now, if we drop into the intraday time frame for the ES for a moment, I have a few of the key levels drawn out here. 1929 is a key level. Bulls had been defending and has now become resistance. We also have a key level here at 1970. Right now, bears are attempting to keep 1929's offered for a shot at a continuation lower. Above 1929 squeezes price back toward 1970. All right, taking a look at crude oil. Here's crude oil in a daily time frame. So far, what this one has done is seen downside expansion. We talked about how narrow the key range was here. This range from basically 38.50 down to about 35.35. We talked about how narrow that range was. Nice clear HVN, and then value went offered here at 36.88. That was an indication that we were likely going to see downside expansion, and I had key targets at 33.21 and also 31.28. We've reached both of those now. The third target is going to be the 28.91, which is a 100% expansion target from the earlier key range, which developed back in August. So if you take a look at this key range right here from 40.69 up to 52.47, that's the August range. We broke that range to the downside. I mentioned any pullbacks below that range should be selling opportunities for a continuation, ultimately down into that 28.91. So we've almost reached that target with a little bit more to go here. So I would say still, any pullbacks into 33 to 33.20 offers an opportunity to sell for continuation downward into 28.91 and a shot to see even lower price levels into 27.21. Dropping into the lower time frame for crude oil, the key level here to watch is 32.10. That's the level that has a major LVN here in the profiles. Any pullback to that zone likely to be a selling opportunity for a continuation lower. Acceptance above 32.10 opens up a retest back toward 34.30. All right, taking a look at gold now. Here's gold in a daily time frame. Obviously, we talked about the narrow range before, and we saw expansion through the top of that range. I mentioned any pullback to 1088 offers an opportunity for bulls to defend and see a further squeeze into our secondary target at 1130 after our primary target at 111270 was reached. So right now, this narrow 3-day range right here implies coiling up behavior. Eventually, we're going to see expansion from that range. I'm guessing that if we see a push to the downside here, it could be a false breakdown, and then we could see a short squeeze follow into 1123.80 and 1130. Looking at the intraday time frame for gold, you can see here 1092 is the key level. That's the zone there where bulls are defending right now. Basically looks like this, defending the zone for rotations higher. Failure to hold 1092 opens up a big retest at that 1083, and below 83s opens up a move back into 1056. All right, taking a look here at the NQ now. Here's the NQ in a daily time frame. This one saw a violation to the downside here, 44.49, the key range. I mentioned any failure to hold above 44.49 opens up a move into 43.11 half and 41.74. We reached our first target in the first session after the break, and now we basically went most of the way into the secondary target at 41.74. It's important to note here that bears are keeping 43.11 half offered right now for a shot at seeing further downside price discovery. I would say very similar to the ES here. If price goes bid through 43.11s and sees a big short squeeze to the upside, you could see price then become a buying opportunity for a shot retesting 44.49 to 44.70 and perhaps even back toward 4600. So it's going to be very important to see how this thing plays out here, but overall below 43.11.5 implies further downside price discovery into 41.74 and 40.59. Lastly, looking at the intraday time frame, here are a few of the key levels I'm watching. We have the 42.26 to 43.11.5 and 4400 and 45.20. Those are the important key levels here. We've been in a steady downtrending market here. Pullback should be seen as selling opportunities right now. Bears are looking to defend 43.11.5 for further overall weakness. Above 43.11.5 has 4400 with a shot to see a rotation back to 45.20. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week of trading. Good luck and trade well.